And right now, if you see on S&P 500 index is basically also known as the US 500, which is benchmark for all the US stock trading platforms and stock trading indices. If we really note it like this, right now the US 500 is giving a rally upward direction. It is daily time frame, so this is a significant move. If you can measure it in pips or ticks, from head to head, it is basically a 365 point movement. I mean, it is basically a 365.5.05 handle move. It is a big move, brothers. It's a really big move. So right now it is giving a minor pullback, which in gold shows us that the gold is flying higher and higher, but that basically is not the condition. As you can see, we got a pullback till here, and because the US was going up in upward direction. If I have to draw it like this whole pullback was because the US 500 was like this, and then it just goes past this high. We got this significant pullback in gold, but right now the US 500 is giving us like this move, so this is pushing gold for upward directional move. So right now, if I see this whole situation as intervention of uh, smart money and global crisis formation, I basically note one thing in particular about these markets. It is basically that all of these markets are interconnected. They do whatever they want and whatever they can go. Right? If I were to be honest with you, if you really integrate volume profile in your trading, it will give you a lot more edge that you are missing right now. Well, basically the volume profile has been a magic tool for me. When I was learning ICT concept, I sometimes didn't got the full details about the things that he wanted to teach. Well, Marcus is really the biggest and best mentor in the world, but if you find it in my point of view, he explains things like in a loop. We will only get the real answer that he is telling us if we really uh, get the right answer from his loops. So if we crack his loops, we will basically get a real understanding about the market. His whole videos are basically in a jiggle puzzle. If you solve that puzzle, it is a key for market decoding. I have just understood a fraction of his concepts, and I got this level of understanding. And all of this is supplemented with volume profile. The volume profile gives me my missing edge that I am missing. Right? You think that I am just wasting your time here, but the thing that I have just dropped today in this video is basically a gem in volume profile trading levels. If you get a weekly volume profile levels marked on your charts, so if you go from weekly to daily, from daily to 4 hour, and from 4 hour to 1 hour, you will see the magic happening. So right now we will only focus on the mark levels like the rectangles and point of interest areas, and you will see the magic that I was talking about. Right now, if we start from this scratch here, we will see if we had this market volume profile already marked from 10th of October to 20th of October. We would see this volume area high, a low high volume node. Okay, this high volume node will give us a lot more information than you guys think. I basically got a cold and fever. Right now I'm just making this video for the compensation that was remaining from my side for you guys, because I haven't posted any video for the past 6 days. I thought I would post a video daily here for education purpose, but sometimes it just can't click with the routine that we created. So I'm very grateful for what happened. So right now back on the topic, we would have this high volume node if we have already marked this from 10th of October to 20th of October. That's a 10-day profile. And if we were present right at this moment, and you had thought that this, for now, crisscross yourself, just think of it as a general review of the market. You have thought that the gold, after this much of push and an upward level rally, will give a major pullback, but you won't have noticed if you haven't even marked the volume profile levels. If you had already marked this level, you would see this thing forming here. If you are a little bit experienced with the volume profiles, you will notice that these areas, like this volume pump, and this volume pump, always give us a reaction, or a kind of what should I explain it, uh, like a gut feeling based on the levels, not random gut feeling, but based on the level gut feeling. And if you had a little bit knowledge about ICT or smart money concepts, you would have seen this as liquidity areas, right? So these relatively equal lows should have given me a lot more information about the market. If I had been present in this moment, basically, which I was not, if I had been at this point of time, I would have noticed from these areas that this is forming a huge support zone for buyers to enter. And when, as you can just right now, just remove this one, uh, remove this support. I'll mark right now, delete. What did I do? This one should have marked it. So if we just don't include any other stuff like ICT's concepts and support resistance or etc. in this video, if you purely speculate and understand these mark levels that I am teaching right now, you will see that the price just came. If we give it quadrants, it will be more helpful from here to here. Now you can see the tick precision. It came, the price came till the first quadrant. It did not go any further. The wicks are just for damage. The wicks can go even further right here. It doesn't matter. The wicks are just for damage. They are just here, present here to damage. You can see right at this point, we don't see any closure of candles below this point, below this price. It indicates that uh, the liquidity has been swept, but here this bump, this point of control, it is not a point of control but a high volume node. That was my mistake about. But if we notice that at this low volume high node, high volume node, sorry, I'm just right now confusing. It is basically 12 p.m. at night. I'm a little bit sleepy, but uh, leave this thing aside. Just focus on this. If we see this high volume node, the price came, big past it, and then reversed, and then reversed, like till this point. When this, as you can see, this is also tick precision point. Here we can see this volume pump, a high volume node, we got a reaction point. It comes till here to this volume node, high volume node. Right now you are seeing the magic, the real magic that I was talking. If there was anything that should be magical, it should be volume profile levels. These are truly magical levels. It works about 85 to 92% of the time, and it is not exaggeration, it's real factor and point that I'm presenting you. If I were to sum all of the thing that I have talked in this video in this one sentence, in this last part of the video, that would be that this area that I have taught you, had you practiced upon it, gave you some little bit of theories, a little bit of whats and ifs, buts and ifs. All of this indicates that whenever we find our high volume node area in any trend, be it bearish, be it bullish, or even if it is consolidation, um, all of those indicators that at this high volume nodes some manipulation or someone big with big bags of money present in his pockets is entering in the market. He's trying to reach out for the levels that he wants. He wants to manipulate price. So these areas are particularly very important. If you learn how to map out these areas, you will basically get 20% understanding about institutional entries. The rest are about order flows, the order blocks, FVGs, and etc. Right now, I will also give you a tip about uh, FVGs. Right now at this point, if you note from here to here, we have an FVG, and right here we have a low volume node. As you can see, this is a low volume node. This is a low volume node. So whenever you see low volume nodes plus an FVG, basically low volume nodes only form when we have an FVG, and that's what I have noticed in my career of about 2 to 3 years of trading. Right now I'm new to trading, but what I have been giving you is the proliferation of the topics and the concept that I have been practicing in the past 2 years. This is all I have learned, and I'm giving it to you for free. That's because I know the pain that we get when we don't have clear direction. I had paid a lot of money to the gurus that are present here. I invested about $2,000 to $3,000, but that's, I think, worth it, because that was only possible that I'm right now here was because of those uh, gurus that just gave me unscrupulous knowledge that I didn't want. Only then I understand that all of these people are fraud. And when I got to know about volume profiles, and when I was just using volume profiles for level trading, I noticed the real mentor, the mentors of every mentor present in the industry, Michael J. Huddleston. He gave me everything I wanted to know. He gave me the real inside information about the market, and which were basically very helpful for me. As volume, as I trust volumes a lot, I compared his concepts with volume levels, and most of the times the things he taught were based on the volumes. Or as I will give you an example here. If you notice, from here to here we have this breakup structure. At this point we have this pullback right at the dealing wedge 75%. If I was to give you a little bit more clarification, from this point to this point, yeah, this point, as you can see, this point gives us a 75% of area. It rejects, comes down, breakup structure, it comes back, but here we have this a little gap. If you were to zoom out a little, we have this area here which is empty. It's empty, but right, if we go a little down, we see this volume deficiency, and when this price comes back to this deficiency, you can just see it from here. It does not even touch it, but reverses. That's what I've learned. Sometimes the price moves the way he tells us, but sometimes the price gives a little bit unexpected movement that we just can't get at the moment of these. So I would recommend you to always have volume profile levels noted out, because these points will give you major understanding about institutional movements and major point of movement areas, and these things will be very helpful for you in your trading career. That was my personal tip for you. Right now we have on this pump, not in this pump here. Basically this is a huge volume deficiency. It will be eventually covered and struck, because the market runs in a loop, and this loop always forms in. If I were to give you a circular type of loop formation, it moves in this direction like this. Eventually this is a lot more expanded than you think, but this area will be covered eventually. The volume deficiencies that we see here, they will be covered, because it will just move like this. Eventually when the movement gets bigger and bigger and bigger, these volume deficiency areas will be covered. I hope you understand my point, because it took me a lot of time to understand these points. So it isn't any type of shame. It is just that you are just not at the level to understand these concepts. You first have to foundation and strengthen your foundations. And let's continue to the lecture right now. If you note this volume area high, like a high volume node, this is also point of control. Just when price comes, just as it touches, don't ever believe on wicks. Only believe on wicks of high time frames. 1 hour is not a high time frame, it is just a lower time frame for institutions. So don't trust these wicks, just trust the process of body candles. Right now, as you just see, the bodies comes, it gives a reaction to upside. The reaction fails, it comes back, reaction gives another reaction. But this reaction eventually fails and this comes back. Now notice to which level this pullback came. This reversal came. It came till this high volume node. Right now you're understanding my points, right? This is a magical point, magical area, and you can see tick precision here. To the tick precision here. This tick reversal gives us a whole move about, which is, this is gold. It gives us a move about 88 pips. That's a lot, guys. No, it's not 88 pips, it is 8828 pips. If I were to be explaining it, and the gold that we usually call pips, these are points we call pips when we have 10 points of movement. So this basically forms 880 pips of movement. That's a lot. That's like a monster movie forward to tell. Right now, if you had already marked this area, this point of volume was already marked on your chart, you gave it a little bit of trust and only put a lot above. If you usually put 5 lots, you just put only one lot. This one lot would have given you a profit of at least $8,000. That's ridiculous for a single trade, and for only one lot. That's ridiculous in my opinion, because I trade on basically on 100 pips or 50 between 50 pips movement of price action. And that example was a clear pure one where price respected the previous volume nodes. Sometimes it does not like this, and did not respect these volume areas hard, but gone a little further upside, but eventually it comes back. Right now this pullback you can also note it. Okay, you can also get a key takeaway from just this pullback. If you know this pullback comes back, if you are a smart money trader, you would say that this was just to fill this uh, volume or the fair value gap inefficiency cover, and that's okay too. I also sometimes get these types of rejection at these low volume nodes, like here and like here. So from what I've understood using volume profiles, if price wants to go up, it won't respect uh, low volume nodes. It just crosses past it. If the price wants to hold in a singular direction or singular on a single price range, it will give us rejections at uh, low volume nodes and reversals at high volume nodes. That was a tip from me. So let's go ahead. It gives a rejection at low volume node, comes back down. Now you see the magic again. Right at this, you can follow my crosshair. Right at this point, here from below it we have a low volume node, and above it we have a high volume node. It gives a little, goes a little past it. We can always give algorithm a little bit chances of going about 10 ticks or 15 ticks higher or lower to the particular area, because sometimes algorithm gives a lot of backouts which are particularly hard to find out. So as you can see, this gives us a clear to the tick rejection at this weak level of this candle. Right now you can see the move again. It again gives us the same type of rejection at this fair value gap, which is a low volume node. It just gives us a tap and reverses. If you can see right at that point, it gives us this rejection till this low high volume node goes up again, gives a reaction till here, then goes up again, gives a reaction, comes back down, taps it and goes upward, then gives a reaction right whenever the point of control is touched, it will give us a reaction. If it comes from above like this, it will give reaction to upside. If it comes like from down a little upward, it will give us reaction down. If it comes down, if it fails, then this one is okay. Okay, so whenever you see price give go touch a point of control, then it gives a reaction, and then tries to go higher, again gives a reaction, but it fails to give a reaction again. The price moves past the previous highs and past the point of control area, and when price comes back down, and when this touches the point of control area, it always give a reaction to the opposite side. It won't give the reaction in this side, but will give reaction from here to here. And that's a particular point you have to note whenever you are trading point of controls, because this is a particularly good tip from me. If you get a grasp on it, you will sometimes find uh, 10 to 15 pips of movement easily. Then again, got a rejection from low volume node, got a reversal from high volume area, high volume node. Right now you can see this move. It comes just at this low volume node. Here we have a high volume node. I will give this ray here, and here. We can see it comes, just dips with a big hair, just taps it and give us this. Again this happens, this again happens at this high volume node. This is a high volume node, this is also high volume, the same volume area, this and direction. Right now we are on this high volume node, right now we have this rejection point here, because in past, if price in present, we always have the doubt that will price move past this high, or will it reverse from here, making it a POI point of interest. But sometimes we fail to notice that there is liquidity at this point, but there is also an institutional entry right at this point. The price shouldn't go past this level from here. If this goes past from this here level from here, price will go upward again and give this as a rejection or a reaction from here to here. But if price did not react and did not cross this particular line that I have drawn from this area, the price should go from here to here till this IO node or till this IO node. Nothing can be perfect about analysis at the present point of time. All of the reference I have given you from are based on the historical data I have presented in this video, but this historical data gives a lot more information what will happen based on these levels in the future. So always try to read the price from past historical charts, because the past point of interest shall be always revisited in the future. So those revisited areas becomes our interest areas. Right now, as you can see, price is giving us a lot of rejection here. As you can see, this week didn't go past it, but this week goes past this liquidity and becomes a singular high that comes down, comes then backs up again. So if this high liquidity comes above, then comes back, and right now this is the candle, our hourly candle. This hourly candle should go up, but don't cross this level, this particular level, and then comes back down. If this crosses this level, I will be bullish for the next day. If this candle didn't closes above this, I will not and ever consider for you to take your trades based on wicks. Only trade on wicks when you have liquidity sweep with those wicks. For any other case, you won't have to play and trade on these wicks. Those wicks give little information about candles, but body gives a lot of information. If you are on high time frame and daily and daily candles, just wicks it. Does not amplify any significant movement. But if we note this daily uh, closing range like this one is sweep, we have to always look for the wick. Only look for the wick when you have the area of body across. That's another tip. I've been dropping gems all along this video. This video should be about an hour or so, but if you have watched this video you will be having a lot of epiphanies about the concept that you were not able to understand previously, but right now you will basically get a lot more understanding about those things, because I have been and tried to simplify it as much as I can, so you guys have easier chances of understanding it and becomes easy for you to understand and amplify it. Whenever you apply these concepts, you will always notice some level of precision, like at this points. As you can see, it didn't go past this area. If you have this kind of analysis performed in your chart, you will be ahead of 90% of traders that are trading based on price action or other concepts. Because volume profile, in my opinion, I don't consider another opinion, I will only give my humble opinion. Volume profile is best tool to combine with ICT or smart money concepts, because smart money concepts are based on the institutional entries and institutional exits. It is based on the footprints of institutions, but the volume profile is clearly telling about institutional movement. It is not talking about institution footprints, it is talking about institutional moves. What will institution do at this point of time? And from what I have learned from ICT predict those based on his concepts like FVG or blocks or quarterly theory that he talks a lot about in indices market, and those give a lot of information away in free. So I would always recommend for you to at least watch his market maker series and market maker premier series. If you want, you can also watch another other series like 2022 mentorship if you just want to be a pure IC trader, and that series alone will give you a whole lot of Pandora's boxes keys that will open every time when you learn another concept, because his concepts click with each other. They give a clicking feeling, like in my saying gut feeling about trading. So be happy. If you have chosen trading, you should just focus on it. Don't uh, don't be demotivated, because whenever you try to do something like sitting in front of your desktop, your mobile phone, your tablet, whatever it is, and are trying to learn something new about trading, you are trying your best. That's mine, in my opinion, it's your best, because the effort you have made to pull out your desktop or your mobile phone and then open a video that is about telling about educational content of trading, then you are giving at least 50% from your side, because other 50% will be only when you have real interest in this. That pulling out of mobile phone or switching off the desktop is trying to tell you, is simply telling that you are motivated but you don't have direction. In this channel I will giving you the direction that you are finding. And if you be with me, and one day I promise that you will at least have an understanding to get at least one trade correct from 10. I won't guarantee about 10 out of 10 because it's simply not possible even for me. But I can also not compliment and be a promising person which gives you promises about that you will be and getting 7 out of 10 or 8 out of 10, 9 out of 10. I won't give this type of guarantee, but I will guarantee you in a joking way that you will at least get one correct from 10s. So be happy. Allah. Let's meet in another video. Bye bye guys. Be happy and be very very grateful that you are having these types of people spreading their knowledge that is invaluable in the world. In today's world, nobody is just don't want to give away things for free. So be grateful.